Welcome back. Here is your US market recap for Friday, May 8th, 2026. Let's break down the major moves that defined Wall Street today. It was a historic end to the week as the bulls staged a massive rally. The Nasdaq Composite achieved a stunning milestone, surpassing the 29,000 mark for the first time in history. What is even more remarkable is the pace of this climb. We just crossed 28,000 only 3 days ago. By the closing bell, the Nasdaq surged 1.71%, while the S&P 500 also hit a fresh all-time intraday high, gaining 0.84%. The Dow Jones, however, was the outlier today, lagging behind and finishing the session near flat. The primary engine behind today's momentum was the April jobs report, which blew past expectations. The US economy added 115,000 jobs last month, nearly doubling the consensus forecast of 65,000. Meanwhile, the unemployment rate held steady at 4.3%. This data sent a powerful signal to investors. Despite geopolitical tensions and higher interest rates, the American labor market remains incredibly resilient. As analysts at Northlight Asset Management pointed out, even with the headwinds of high oil prices and sticky inflation, corporate profits and GDP are proving they have plenty of room to grow. In the corporate world, the spotlight belonged to AMD. The semiconductor giant saw its market cap soar past $713 billion today. This follows a blowout first-quarter earnings report where AMD delivered an EPS of $1.37, beating the $1.29 estimate. Revenue also topped $10.25 billion. AMD stock has surged 20% this week alone and has nearly doubled over the past month, fueled by the relentless demand for AI infrastructure. However, the AI sector was not without its casualties. CoreWeave shares dropped roughly 7% after the company issued a weaker-than-expected revenue outlook for the second quarter. Their guidance of $2.45 to $2.6 billion fell short of the $2.69 billion Wall Street was looking for. Additionally, an increase in their capital expenditure outlook seemed to rattle investors who are becoming more sensitive to the high costs of scaling AI. On the macro front, we are seeing a mixed bag. While market sentiment was boosted by the US-Iran ceasefire appearing to hold, the conflict is still hitting consumers where it hurts. The University of Michigan's latest survey shows consumer sentiment at a new low, largely due to surging gasoline prices tied to the ongoing Middle East tensions. Looking ahead to next week, all eyes will be on the April CPI data. Inflation is expected to tick up to 3.7% year-over-year, which would be the highest level since late 2023. This will be the first major test for the new Fed Chair, Kevin Warsh, as he navigates a complex environment of strong employment and rising price pressures. Bottom line, Wall Street is celebrating a resilient economy and the AI boom for now, but next week's inflation data could quickly change the narrative. Stay sharp, stay informed.